Now, again, I just want to introduce myself. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. And again, today we're going to talk about NUA, which is Net Unrealized Appreciation, and how it affects ExxonMobil employees as they transition into retirement. And we'll talk about some of the significant tax saving strategies we look at here at the Retirement Group when we do work with ExxonMobil employees. And before we get started, I just want to remind a couple things. Again, the Retirement Group, we're an independent financial advisory firm. We are not employed by, nor are we endorsed by ExxonMobil. If you do have any questions throughout the course of this webinar, there is a Q&A box there. Feel free to jot down your information. It is anonymous, so your name will not be displayed, and I'll be sure to try and address that at the end of the webinar. If we have quite a few and we don't get to everything, give us a call, and we'll be happy to address that, or we'll follow back up with you as well on some of those questions. Also, we do have a chat box here, so we'll be putting some information in there periodically throughout the course of the webinar, different items as far as how to follow us on LinkedIn, how to set up an appointment with myself or one of the other advisors, as well as any pertinent update information for ExxonMobil employees. Now, at the end of this, we may also throw in there a link, or you may get an email for a survey to let us know how we're doing on these webinars and helping us keep the content fresh. And if you take the time to fill that out, I think we've agreed we're going to send a box of cookies your way as well as a thank you. So, for those of you who haven't been on one of the calls in a while and haven't sat down with us in a while, I just want to remind everybody who the Retirement Group is. Again, we are an independent financial advisory firm that focuses on working with corporate employees and helping them transition into retirement. We've been doing this for right around 30 years or so. We work with about 25 some odd companies, and obviously ExxonMobil is one of the large companies we do a lot of work with. We've been working with them extensively for a long time. The reason we only choose select companies is it allows us and our advisors to have a deeper understanding of your benefits plans inside and out, so we can help you through that transition process, help you avoid a lot of the different mistakes and pitfalls we see from time to time that individuals suffer if they're not working with an advisor, or they're working with an advisor that just doesn't know the plans. There's a lot of benefits at Exxon, and you can leave money on the table. NUA is one example of that, where a lot of other advisors don't understand the intricacies and don't understand how Voya actually does a transaction, and they can cost their clients quite a bit of money. So it's something to review. Now, we do have offices throughout the country, so rest assured, if you'd like to sit down and talk with one of us face-to-face, we can probably make that happen. But obviously, during these times, we're open to web meetings, phone calls, emails, fax, all that as well. At the end of the day, if there's anything you take us up on, even if you don't become a client, is to run a cash flow analysis. This is a complimentary plan that we can run for you to give you an idea of where you stand right now on your goals for retirement, to let you know if you're on the right path, if there's any adjustments you need to make. And that goes for whether you're looking to retire in 10 days or 10 years, or maybe you want to look at, can I retire now versus 2 or 3 years down the road, and how a lot of different items affect that, especially the benefits plans like the pension, which we have other webinars on, which will go into detail on that. Or you can give us a call and we can go through how that's going to affect you, especially with these low interest rate environments we're in right now. So, but today we're going to talk about NUA. Again, that's Net Unrealized Appreciation, and it's a special tax treatment that's available to you as an ExxonMobil employee, where if you've maintained the Exxon stock, there are some favorable tax treatments when it comes time to distribute that. And those savings can be, if not thousands, tens of thousands, sometimes even over $100,000 in taxes in the immediate picture, and especially in the long-term picture as well. So if you never knew what NUA is, and you just took distributions from your 401k or rolled it to an IRA and took distributions, for the most part, many of you, the bulk of your account is going to be pre-tax money. So eventually you're going to be paying taxes on it as you take those distributions. Now, NUA, what happens is if you've got low cost basis stock, which if you have invested in Exxon, even if it's just a company match, and you've never sold it or traded it, chances are you may have some. What's going to happen is you're going to pay ordinary income taxes on the cost basis, and then the difference, the gain, you'll actually pay long-term capital gains once you eventually sell it. Not when you distribute it, but once you eventually sell it. And historically speaking, long-term capital gains has always been lower than your ordinary income tax bracket. So that's where the tax savings can come into play. And we'll give an example on that and talk a little bit more about those potential savings as well. Now, just want to remind everybody too that there is what's called a triggering event as far as exercising NUA. It's not something you can just do whenever you want. Those triggering events are either when you turn 59 and a half, and or separate service, or death and disability. So we don't want to talk about the last one, but what happens is once you turn 59 and a half, or if you're separated. So some people, if they leave Exxon before 59.5, could actually have two triggered events. So what happens is once that triggered event has passed, if you want to exercise NUA, it's an all or nothing transaction. You need to, if you process NUA, you need to roll over the rest of your account in that same year in order to process it correctly. Otherwise, it will not be validated. Now, if somebody, let's say, retires at age 56 and they don't touch the account for a couple years, and then 59.5 crosses, then that's their last time frame that they can do it. So they will only have one chance to do it in the future. If somebody retires at 61, they only have one chance to do it NUA in the future. Because if you take any withdrawals in any subsequent year after you've retired or passed one of those triggering events, NUA has to be done that year, otherwise you forego it forever. So again, that's one of the big mistakes we see a lot of people take. They may retire and they may take just a $10,000 withdrawal to cover a car note or do something, and all of a sudden, if they weren't keeping track of things, they've blown up NUA and lost the potential of saving thousands, if not tens of thousands of dollars. So let's take a look at a specific example here. Now, let's look at Lucy Norton in this case, and this is going to be kind of a vacuum example just to give you a good idea of how it works, and then we can talk about the Exxon plans in a little bit more detail. Now, in Lucy's case, so let's assume that she's got Exxon stock that's worth about $200,000 upon retirement, and the cost basis between what she and Exxon's put in there over the years is only $40,000. So it has grown from $40,000 to $200,000. So that growth, that $160,000, is what's called her NUA, her net unrealized appreciation, because she has not sold it. It's not realized yet. Now, for the sake of this example, let's assume that she doesn't need to or doesn't want to sell the stock right now. She's going to retire, and she wants to sit on it for another 10 years, and let's assume hopefully it doubles from $200,000 to $400,000. So if she didn't do anything and just took distributions from the account, it would be fully taxable. If she exercises NUA, then she's only paid in ordinary taxes on the cost basis, that $40,000 we talked about, and she'll pay long-term capital gains on the growth when she actually exercises that and actually sells the stock. So this chart will give you kind of an idea. On the left-hand side, we're looking at the tax treatment for NUA. On the right-hand side, we're looking at tax treatment for a lump sum distribution. So again, I said this is kind of a vacuum. Chances are she's not taking the full $400,000 out all at once. But in order to run the scenario, this is the best way to look at it. So let me kind of zoom in here so you can see a little bit better on this situation. If we look at it on the left-hand side, like I said, what would happen is when she exercises NUA, she would pay ordinary income tax on that $40,000, the cost basis. Then the long-term capital gains, that $160,000, she will not pay tax on that until she actually sells it. Now, the green box there, that's the future growth from $200,000 to $400,000. When she sells it, she'll pay long-term capital gains on that. Now, another caveat, and obviously these things can change, is that right now there is what's called a step-up in cost basis. So let's say that she did not plan on selling it, and she passed this on to her beneficiaries. That green portion would actually step up, and there would be no taxes owed on that. Now, this is something kicked around the administration where they may change this, so again, this can always be changed in the future as well. On the right-hand side, we're looking at the tax brackets, where if she were to cash that out at $400,000, she'd be paying various tax brackets. She'd pay the 10%, the 12%, the 22%, the 24%, and then she'd cap out at the 32% tax bracket to get her her average tax rate. So what we'll look at is how much is she going to be looking at paying if she were just to simply exercise NUA and then liquidate the stock in 10 years, versus if she were to go ahead and liquidate, roll it over and liquidate it, or just liquidate it off from the 401k and take a distribution at that time frame as well. So if we look at this, for her situation, if we look at the NUA being exercised, on the left-hand side, again, she's paid ordinary income taxes on that $40,000, and she'll go through two tax brackets, but ultimately her taxes due on that will be about $4,600. Then later on, after the 10 years, when she sells the Exxon stock, that $360,000, which again is the $160 in UA, plus the additional $200,000 in growth, she'll be paying long-term capital gains, which currently right now would put her in the 15% long-term capital gains bracket. There's a 0%, 15%, and 20% depending upon your actual tax bracket. So her average there is going to be another $45,000, almost $46,000. So when those are both added up, she's spending just over $50,000 on taxes for that $400,000. Now, on the right-hand side, if she were to liquidate that completely, again, we mentioned she'd go from the 10% all the way up to the 32% tax bracket. It would cost her about $96,000 in this case. So ultimately, in this vacuum example, as I mentioned, she would actually be saving about $44,000 on this transaction. Now, I say a vacuum because, again, remember, chances are you're probably not going to take out a full distribution or liquidate $400,000 in a given year. If you're working with us and you don't have NUA options, we're going to work with you managing taxes and help you stretch that out over years. So maybe she took the distribution over 2 years or 3 years, but either way, she's still probably going to be in that 24% tax bracket, maybe 22%. But for the most part, when we work with Exxon individuals, most of them either single or filing joint, a lot of times end up in that 22 or 24% tax bracket based upon the normal expenses that you may see. And again, that long-term capital gains bracket is 15%. So let's use a quick rule of thumb. Let's assume that you're in the 24% tax bracket. You're paying 15% in long-term capital gains. So the savings is going to be 9%. So in her case, if she had an NUA of $160,000, let's just round it up to 10% savings, it would have saved her about $16,000 right now. Or if you fast forward, it would have saved her about $36,000 or so probably in the case. So maybe not the full 44, but probably 36 or so. And every case is going to be unique and different. The benefit is if you give us a call, we can walk you through it. Or if you can get a copy of your most recent VOIA statement over to us, we can run a detailed cash flow analysis, but also an NUA analysis for you. What we'll look at is the cost basis, which is usually found on the third and fourth page. A pretty unique thing about Exxon is that they don't just use an average cost basis like most companies do. They give you line by line your historical cost basis. So there's a lot of individuals we work with that have cost basis going back to $11, $14, $15 a share. So we can go through there, run a spreadsheet, and look at maybe exercising NUA on things that are $30 or $35 and below, or even lower if you want to, and go through various scenarios to show you what the potential savings would be. Like I said, it could be just a couple $1,000s, or it could be $10, $20, $30, $40,000, or even more, depending upon how long you've held that stock and how much stock exposure you have. Now, with the pullback last year, obviously some of the NUA benefits were reduced, but now we're seeing Exxon rebound quite a bit. So NUA is again a story to be aware of as you do transition into retirement, especially if you have some Exxon stock in there. Now, one of the best ways to kind of tie all this together is to run that cash flow analysis I mentioned before. Right now, about 3/4 of Americans over 50 don't actually even have a written plan. If you can spend about maybe 10-15 minutes with us gathering or updating the information we have already on the plans and your spending needs for retirement, then we can run that cash flow analysis for you, let you see if you're on the right path, and also give you some alternatives if you want to look at different retirement dates or different spending rates and things like that. But once we get that, it can also help you back into some investment strategies for the 401k, or if you are looking to retire, options for rolling over to an IRA. And we can also dig deeper into the pension choices you have with Exxon and the difference between the annuity versus a lump sum, especially with the interest rates changing. So again, with that, I want to wrap it up. We just want to spend a little bit of time on NUA. Like I said before, it's a case-by-case situation, so the best way to really see what your situation is to give me a call, and we can run that analysis for you and let you know if it's worth looking at. Sometimes if you've traded stock and gone back and forth in it, you may not have NUA capabilities because you've traded away the cost basis, or maybe in some case you don't have that much exposure and it may not be worth the savings. But if you do want us to run that, we can definitely uncover the potential savings for you, not just now, but in the future as well. So if you have any questions, again, give us a call at 1-800-900-5867, or you can reach us at info@theretirementgroup.com. You can also hold your phone up to one of these QR codes here. There's one to schedule a meeting with myself or one of the other advisors, or there's one to follow us on LinkedIn if you want to make sure you get the updated information we have on Exxon as it comes out as well. And we remind everybody, if you have a question, go ahead and put that in there. It is anonymous. I'll be happy to address them. I've got a couple here, so I'll hit on those, and then we'll go ahead and close it out. But the first question I have on here is I already rolled over. Can I exercise NUA in my IRA? So unfortunately, if you've rolled over your account from the 401k to an IRA, you cannot. The NUA is only capable within the 401k, and it's only on the Exxon stock that you have in there. So that's why I talked about the triggering events and things like that. It's very particular as far as processing it. So if you rolled it to an IRA, no, you cannot process NUA anymore. And then they got another question here is I think I just answered is can I exercise NUA on my other accounts or my other shares? And again, it's just the Exxon, just the company stock basis is what we can exercise the NUA on. And then another one, this is a good one. I probably should cover this more, but it's can you tell me the process in actually doing this with Exxon? So this, we can spend more time on this one-on-one, but this is why I mentioned working with us versus other advisors, because we've done so many NUA transactions. We know the process at Voya, and I hate to say that it can become a tedious process depending upon who you get on the phone. But what's going to happen is once we determine if you want to exercise NUA, and you have separated service, you've passed those triggering events, and it makes sense for your tax bracket that year. In some cases, we'll run it and tell you, hey, you need to keep it in the 401k until the end of the year. We'll exercise it next year because it's going to put you in a better tax bracket situation. So we'll run through all that with you. But what's going to happen is we'll pick the amount of shares that we're going to exercise NUA on. Let's say shares that are $30 and below, for instance. What will happen is Voya will actually have computer shares through the transfer agent create a new account for you over there. They will transfer those shares over to computer shares in a brokerage account under your name, and then you'll get a 1099 in order to pay the taxes on that cost basis. So if we go back to Lucy's example, that $40,000, she'd have about $200,000 of Exxon shares moved over to computer shares. She'd get a 1099, so she's responsible for paying taxes on that $40,000. Once it's in computer shares, give it about a month or so to get the statement. You can leave it there, or if you're working with us, we can transfer it over to Charles Schwab, who's our clearing firm that we use, and then we can help you monitor it and help determine an appropriate sales strategy down the road, whether it's 10 years down the road or never, because you want a step up in cost basis or something like that. And then what's going to happen is the rest of the account. So let's assume in Lucy's case, let's pretend that she had $200,000 of Exxon stock and she had $500,000 total. So that other $300,000 would have to be rolled over to an IRA. Again, if you're working with a retirement group, we'd roll that over to Charles Schwab. So in the end, what would happen is in Lucy's case, you'd have two separate accounts. You'd have a rollover IRA for $300,000, and you'd have a brokerage account for $200,000 with ExxonMobil in it. And then that IRA, we can diversify it and help you manage that if you want, or you can do it on your own. And then the Exxon stock, again, there's going to be no future taxes until you physically sell that, whether that's a day away or whether it's 20 years down the road. All right, so again, I just want to remind everybody that if you have any questions that we didn't cover today, feel free to give me a call. You can reach us at 1-800-900-5867. But again, each situation is unique because of the way Exxon does the cost basis, and even more detailed if you have after-tax assets in there, that can be a factor as well as far as paying down the taxes or looking at a Roth rollover. So it gets a little bit more complicated, but just give us a copy of that statement. We'll be happy to run through it in detail and show you all the potential savings that you can see. I want to thank you, and I hope everybody has a great day.